Welcome back. Thanks so much for tuning in. This is the Money Show on ET Now, and I'm Alex Mathew. Now, this next conversation is going to be very helpful for you, particularly in this season where you go out a lot more, you're buying a lot more things than you normally do. Perhaps you have to buy those gifts that you have to give out to people that you meet. And you're going to be swiping those credit cards much more than you normally do as well. And while those credit cards can be an amazing tool, they can also end up being a liability. We're going to be talking with Kartik Jhaveri, who's joining us right now. Kartik, thank you so much for taking the time. And I know that I've had this conversation with you, which is why I wanted to have it again. And I think it's a very topical conversation to have. First of all, I want to start by asking about the fact that when I spoke to you the last time, you said that credit cards can be an amazing tool. Why do you say that?
That's the most fabulous thing to have in your wallet, I would think, because it is money. You can spend it at your convenience. You don't have to carry wads of cash. You don't have to worry about, any other mechanisms of wallets, Paytm, any other technologies. Just one little card, swipe it. And the best part is you have the convenience of anywhere from as much as 20 days to about 50 days to actually make the payment. So when you're making that expenditure, you don't have to worry about having money in your bank account at that point of time. Your money could be, a salary which will come in a little later. It could be an investment which you will liquidate a little later, a few days later. You can plan your cash flows, you can plan your finances. And not only that, then you get reward points as well. So some part of your shopping could also become free. It's been happening for me for the last 20 years. So I've been enjoying this journey of using not one, but multiple credit cards.
I had a question about that, Kartik. You say, I have a question about that. You say that you've been using multiple credit cards, but it's all about managing your cash flows effectively, right? And planning your cycles. So is it a bit of a challenge, would you say? Can the average person manage this effectively? Or do you think you need to be a little savvy to manage more than one credit card effectively?
I think it's really simple, Alex. It's really simple, Alex. What happens here is that, my segregation of cards is personal expenditure. Within personal, there is something for, things that I do like shopping and entertainment, etc. That is one card for that. And there's another card for other important and financial transactions, if you may. And then there is a card which is for business. And then for business, if I have 2 companies or 3 companies, and there is one card for each company. So there is no mix up. Now, how do I ensure that all these payments happen on time without any miss up or without any slip up? So what I have done personally is I have set up direct debits and I have connected all those card payments on the due dates to my bank. So for example, if I had if I had a card of a bank A, and if I have an account with that same bank A, most of the times those banks are super happy to let you have a standing instruction that on the due date, the money is debited from your account. So I'm actually not in the business of actually making physical payments month after month, cycle after cycle. It's just happening automatically. My job is simply to ensure that if this particular bank account is designated as my shopping and entertainment account, then I at any point of time have some money funded in that account. If it's personal, then that my account is funded. Sometimes larger expenses. Like today, I just had to make sure there is a huge payment due tomorrow, but I didn't want to trust the direct debit system. What if it failed? And then I would have had to pay penalties and interest costs and all that. So I ensured that today, specifically because it was a very large payment, I logged into the website and I made sure that I make the payment on my own. So I have a screenshot. My due date is tomorrow. I've paid today and the money and everything was arranged. So sometimes you have to remember, but 98% of the times it's all automatic.
I like how you say 98% of the time, because it seems like you've actually mapped that out. All right, but in terms of using a credit card, one of the advantages I think over a period of time will be if you are regular with the payments and if someone follows the tips that you've just suggested, then that can very well be the case. For someone with no other liabilities, Kartik, this would serve to build a very good credit score, wouldn't it?
Sorry, I guess the voice cracked away there. If you might want to repeat that, please.
So what I'm saying is, for somebody with no other liabilities, Kartik, would this also serve to build a very good credit score?
Oh, absolutely, without any element of doubt. Firstly, like I mentioned, it's a great convenience. And if you have no civil score, and let's say at some point of time you want to apply for a car loan or a house loan, or even for that matter, a slightly larger personal loan, what is happening is you are actually borrowing money from the credit card company. So essentially, it's a loan that you're taking for a very short period. Could be, like I said, 10 days, 20 days, or even 50 days. Why I say 50 is because if you actually spend, like I mentioned a while ago, if you actually spend on one day after your due date, then you have 30 days before the next bill is generated, and then another 20 days as credit period to pay that bill. So you will have 50 days, right? So in that period, how have you used your loan? You can demonstrate your behavior to the entire banking system. And the moment you pay it on time, then you start having a credit history. That is to say that this person has borrowed this 10,000 or 50,000 or 2 lakh rupees, and he has for the last 24 months or 48 months has zero delay of even one day in terms of making a payment. So when you build that kind of a history, it helps you in a huge sense. It actually generates your score. And a lot of times I've noticed this thing, people who've never taken a loan in their life and who are earning very well, sometimes they don't even have a credit score. So it's a little difficult for the bank to assess how creditworthy you are. Now, fortunately or unfortunately, that is the system that we follow. And it's a nice idea. I'm not suggesting that you go out of your way and use it. I mean, let me put that as a disclaimer also. I think it's a fabulous facility. And if you want to use it, it has multiple advantages. And building a credit history is one of them.
Well, that is actually a conversation I intend to have in the near term. How does a credit score actually get generated? But let's hold that thought for a bit. I would think, Kartik, though, that there's a very fine line, and I began the conversation like this, between using this as a tool, as you have suggested you can do very efficiently, and it becoming a massive liability, and that's because of the kind of interest rate that is charged on the actual loan that you take, beyond the window that is provided by the credit card company for you to pay it back. How do you avoid that, and should you avoid it at all costs?
Absolutely. You should avoid it by all means. You should not even get into that system, because what happens is if you even make 1 rupee short payment, then this is all computerized, right? It's all automatic. Nobody's sitting and calculating things. It's the computers who are doing it. So even if you're just one single day late, what will happen is the system will understand that as a short payment, and for which the entire amount that you have taken or whatever you've spent or whatever you've used, you will be charged an interest on that. And that interest is hefty. It ranges from anywhere between 3 to 3.5% per month, which means, at the end of the year, it's almost like 40% plus kind of interest rate that you're paying. Now, you've been charged interest on that. Then there is GST on those finance charges, because they're charging you interest, they're giving you a service, so they'll charge you GST as well. And then even for a tiny little payment, it balloons into a huge thing. So like we mentioned a while ago, just ensure that if you have a card, you pay on time, you set up direct debit, so you never have to worry about payments, or you never have to worry about missed payments. Plus, these companies are very helpful. You see, they send you SMSs, they'll send you an email, so-and-so amount of money is getting due, the minimum you can pay is this, and but ideally you should clear the total bill. See, credit card is a facility so that you don't have to use cash right now. You can use that cash elsewhere. You could wait for your cash flow to come in, or even for very advanced users, which I do sometimes, you could have that money invested and you're making some money on that in that short interim period also, you see. But pay it on time at all means, and never ever get into this interest rut with the credit card company. And they're not making a loss. Every time that you use your card, there is a certain small fee between 1 to 2%, sometimes even 3%, that the merchant is bearing for giving you the facility to use it. So merchant is actually
Right. Okay, Kartik, I think we're having a bit of an issue with your feed, but very fair points. I think you've managed to communicate most of the advantages associated with using credit cards, and as you've suggested, you can potentially use more than one very effectively as well once you put the system in place. tips and tricks that I'm sure all of our viewers will be able to use very efficiently. Thank you so much for taking the time. Pleasure as always speaking with you, and look forward to doing it very soon. And on that note, we're completely out of time on this edition of The Money Show. It's been an absolute pleasure bringing it to you. Do stay tuned. This is ET Now.